Hi, everybody. I guess we can start. Welcome to the first panel of the day. And we're talking about harnessing news sentiment in Forex trading. News moves markets quite a lot, has a lot of influence. Markets are swayed from one place to another. And today we have a distinguished panel. So first and foremost, I'd like each one of you just to present yourself, say your names, your title, who you work for, and then I'll begin asking the questions. And thank you everybody for joining us here. So we'll go through this order. Yeah.
Thing working? All right, perfect. Good morning, everyone. My name is Rowan. I'm representing TradingView, all-in-one financial trading platform, which I hope does not require further introduction. I'm responsible for international growth with a team based in 22 countries and responsible for partnerships and integrations globally.
Hello. Hi, everyone. I'm Danny Salman from Multibank Group. I'm a senior market analyst. I've been with the company for nearly 4 years, and I'm also leading the content team as well. And we try to provide, news, insights, and data to traders. Just one of the many things we do at Multibank Group.
Hi, everyone. I'm Garen Masrilian. I'm the CMO of Easy Markets, a broker that's been around since 2001. We're a broker that basically international broker with 5 different licenses all around the world. I head up the Easy Markets marketing team for the last 2 years. And before that, I was working in agencies for over 10 years. That's me.
Hi, good afternoon to everyone. This side Piyush. I'm from Connect Capital Market. I'm working like Chief Investment Analyst. And we are here from like 2019, based in Dubai. Basically, we are more for retailers. And we are more for like to give training, knowledge about retailers, how to trade, how to invest, for guiding and everything.
Okay, thank you. So now we'll begin with individual questions to our panelists. I'll begin according to the order we're seated here to make it simple. So, Rowan, we're from TradingView. As you said, there's no need to introduce the company a lot. We all know it. So
I hope so.
Yeah, I'm a user of TradingView. So with TradingView's global audience, how do you see the differences in approach when it comes to sentiment between people who are traders, and those who are market participants and analysts? Is there how do they differ, these kind of people?
I believe it's essential to separate and differentiate the source of the news, the source of the content which is coming. On a high level, you can separate that between analytical, i.e. market experts publishing in the news, publishing in the media, like FX Street. I know that Easy Markets have got quite a strong analytical team of their own, which are responsible for producing the content and basically shaping the market agenda. But then there is also a very specific and I believe ever-growing case for the socially sourced news elements produced by the users, and I believe the previous keynote speaker have just provided this not so recent anymore examples of Wall Street Bet and Twitter, now X and Reddit communities, which can be even more efficient in terms of the news production. So obviously, when we are thinking about expert analytics, we are thinking about their expertise, their competence with covering the market, and that's what builds trust with the, let's say, with the market, with the agenda that is being proposed. But at the same time, there is a very specific advantage that is provided by the social element of news, which is primarily coming from the speed and the capacity that is being provided. You are more likely to get engaged with the any specific market news topic if you are following the social rather the expert point. Now, very important reservation here is that it is not either or question if you need to choose between expert or analytical part. The most likely scenario is that the expert is already being set up, and rather the question for participating brands is to see how they can engage the audience further via the social element of the discussion. Because eventually, any brokerage, any news provider, when he thinks about producing the news, he's thinking eventually about engaging the audience further, so to drive them towards being more active in the market and considering that plan. So my point of view here is to invite brokerages to see how they can introduce more of the social element and the social engagement on top of already provided expert analysis.
Okay, thank you very much. Thorough question, and we'll move to Danny on your left from Multibank Group. So, from your perspective, Danny, how do you see sentiment, especially emotionally charged sentiment, impact trader behavior, market decisions? We're talking mostly about fear, but of course, there's always an element of greed. Do retail traders use sentiment indicators or trust their instinct when news breaks out?
I think, of course, news sentiment has a big impact on traders' behavior, and primarily with trader psychology. Let's say news comes out, and then negative sentiment floods the market, and let's say it's primarily negative. You can get that fear of panic selling, so you often see traders closing positions quite early in order to avoid potential losses. Or you see traders, for example, not entering the market because, they're quite fearful of what's happening. Now, there's always, I would say, a wide range of types of traders. But, it depends on the trader and how he views that risk. Some people see it as an opportunity, whereas others see it as a threat. And so that's important when it comes to, I would say, negative news sentiment. And you could say that, to some extent, that traders are influenced by these negative news sentiment as well. But more importantly, I would say that new traders, they're more susceptible to these, knee-jerk reactions or quick, maybe a bit impulsive to take trades. Whereas I say a more experienced trader would already have a plan, a risk management in place before the news breaks out. And yet, I would say some traders do use sentiment indicators like the VIX, for instance, or the Fear and Greed Index. So it's kind of gauging the market where it is. So I think it's an additional arsenal that you would add, additional tool you would add to the arsenal of, analysis. So yeah.
Okay, thank you. And move on to Garen from Easy Markets. So I looked at your profile. I saw one important thing there, the word branding. So with your background in branding and marketing, how do you see influencers or social platforms like Twitter, Instagram, and other social networks were mentioned here affecting trader sentiment? And how should brokers navigate this roller coaster at times?
Well, I'd like to take a step back here just before I go through.
Sure.
I think the first thing to set is the spectrum. That's how I look at it. So, in terms of influencers on these platforms, there's usually the spectrum is education on one end, and then selling the dream on the other end. So this is it's a quite important way of looking at things. So when it comes to brokers and how they should be navigating this, the first part is they need to look at it from a regulatory aspect. So to know that the person that they're going to be collaborating with is on the left side of the spectrum, basically, on the education side, providing as much information possible to the trader. That being said, the platforms you mentioned is a good example of where you can find the ones on the selling the dream side of the spectrum, right? But on TradingView, funny enough, it's more focused on the education aspect. The system is designed to get these, I would say, influencers and traders, or finfluencers, as you would call them. They're more designed to come to that platform and build more educational material and give more value to the trader, and that's quite important. So from a broker perspective, at least here at Easy Markets, in my role in Easy Markets, what I try to do is tell a story. That's where I come from. So you have the option to tell the story from an educational perspective, and you have the option to tell the story by selling the dream. And I would recommend to give the power back to the trader. And for you to do that, you need to come at it from an educational perspective. If you come at it from the selling the dream aspect, you're not really giving power. You're taking that from them, and as the influencer, right? You're taking that decision. You're telling them where to trade and how to trade. So that's what I would say.
Okay, thank you. Give them rods and not fish. Okay, and Piyush from Kanak Capital Markets. You've been in the forefront of innovation for quite some time, working with emerging financial instruments. Now, with more sophisticated news sentiment tools, have investors shifted more into fundamentals, or how is the landscape right now?
The thing is, the new retailers who are coming, they are more into sentiments. They will not look for longer run, like if you are fundamentally correct, you will not lure into the sentiments. So the thing is, the new investors or the new traders are coming, they are looking for like quick profit. So if you are more looking into sentiments, okay, so as me, I'm a risk management guy. I will tell you, if you are looking for any Twitter handle, so it doesn't mean if you have 50 million follower and if he's saying that, okay, this can happen, so it's not. First you have to clear with fundamental, the longer run. Let's say there are so many news handles, you can see what's happening. So for example, if the short-term news is coming and there is a political instability, so more experienced trader, they will not get into it. Okay, but the new retailers, they will think that, okay, this is the opportunity, we should catch in or we should jump in. But the trader who are experienced, they will cross-check. Yes, they will mitigate their risk by seeing the news and everything, but it doesn't mean they will get into it. So the thing is, yes, it's quite important when you know the sentiments of the market and you will mix up with your longer run, you will mitigate your risk. If there is something for quite a few days, if there is a political instability and a country is giving their like bank policies or something, so you can mix up your risk. You can mitigate your risk with it. And if you are more fundamentally correct in longer run, yeah, returns will be less, but you will be safer side. So if you are correct with sentiments and fundamental, you are on good journey.
I see. Okay, thank you. Now I'd like to open here the panel to a discussion. We're going to talk about, well, something we already touched on quite a bit, about navigating emotional on one side and rational decision making on the other side. And maybe we'll start with Dan. You mentioned the negative side. Do you think you can the negative when there's something negative in markets? Is there more of an emotional reaction, and then rational things are thrown out, or?
Yeah. So definitely, sentiment and news sentiment has a potential to sway, headlines, media in both directions, whether it's, fear or being overly optimistic. And I think it's important, to kind of understand, where do you lie, where do markets lie in those spectrums. So it's definitely, news sentiment is a good way to gauge, how markets are feeling and basically giving you the overall mood of the market. But I would also add to that that there's definitely more that needs to go into news sentiment and mood, and to help traders or to get better knowledge or equip them with knowledge, provide them with education from the sense that providing a daily technical outlook through different trading sessions, whether it's a London session or a New York session, providing them with weekly newsletters covering major economic events, what's about to happen and what has occurred, and basically, giving some sort of view and deeper understanding to what's happening in the market. So, in general, overall, giving up-to-date information, staying relevant, and the quality of the data, that's very important for traders.
So basically more data, anybody feel free to respond. More data just reduces uncertainty, so traders feel more comfortable, or is anyone want to say about the...
Sorry, you said more data?
No, Danny mentioned that you provide more data, and I said it reduces uncertainty, and uncertainty is anxiety in many cases.
Yeah, but just to go back to the point, I think in terms of sentiment, I don't see one taking, looking at it from a marketing perspective, obviously, I don't see that one takes a bigger toll over the other, whether it's negative or positive. So there could be a positive news and people will overtrade, or it could be a negative news and people will overtrade again. So like if NFP is coming and if it's going to be a 0.5 rate cut, what we usually see is before this big news, whether it's going to be positive or negative, there's always going to be that big spike happening. That's how I see it from, let's say, from a lead or marketing acquisition perspective from my end.
Anybody want to add? Hot mic here. Yeah.
That's very sought after microphone. Well, in terms of anxiety, I guess step one is to get anti-stress ball. Very very handy accessory. Also helps to work on the finger muscle dynamics. If that doesn't help, go to TradingView. We are trying to make lots of content, and crowd wisdom suggests that the more you get engaged on an analytical site, like the more you read through, like the more you come down. Basically, low-key, I'm trading myself still. Cannot stop that. So whenever I've got another stupid idea of entering long gold, well, this year it's not that much of a stupid idea. My go-to solution is just to open the idea section and filter it by the opposite direction of the sentiment. I.e., if I'm looking gold, I'm opening short opinions, and I'm basically encouraging or inviting the audience to argue me down, argue me back. And I'm reading through, let's say, half a dozen or a dozen ideas. And let's say most of them are not that engaging, but some of them can really spark the counter-argument, which can help me stay away from some short-sighted idea.
I see. Yeah, in our Discord community, we have at FX Street Premium, we also have lots of questions about gold that you mentioned. I think it's not a coincidence. It's quite a popular asset right now, and sometimes people look for that contrarian go. They especially when there's a big move, I see people looking for, one of the questions, will it continue in the same direction or will it reverse? And for me, sometimes the answer is, breathe a second, calm down, and before they ask for another update, let's assess the things more calmly. And many of you mentioned education is the important thing. Do you also, I'll mention here something from our experience. The word education is something that isn't that interesting for users, for people. They want tell me what to do right now, and which is a shame, because as all of you mentioned, when people are more educated, they take better decisions. So, how do you see the education part when it comes to managing news and big news events?
For me, education is something first you have to know, like, let's say if you are trading on particular currency, you have to know like which data are coming on particular month, on what dates. So data is something which drives the market, and technically something effects of that fundamental. Fundamental is something which creates cause, and technically something effect of that cause. So for me, education is something first you have to know, like, okay, if this data is coming, which things will be affected. If you know, okay, this data is coming and their bank policies, they are changing, so what will be the effects? So this is the first step when you are coming into the trading. So when you know the fundamentally that, okay, these data are coming for these countries and these currencies will, okay, affect in this way. So first step is something which you have to know, like which data are coming and how it works. Then technically something it will take some time for you. So it's a slow process. First you have to be perfect. You have to be with the data, how it's coming, how it create effects. Then go slowly, mitigate your risk. Take only small of the portion of your amount. Then slow and slow and slow you will come into the technical part.
I see.
At Easy Markets, we take this in a couple of stages. So the first thing we do is we try to understand, we try to break it down into bits. So it's if you poll the audience here and you ask them what sort of educational material they would like, a few percentage would say they want it in bits and pieces on their Instagram reel, so it shows up. Others want a 2-hour-long trading session, with an analyst to show them which direction to go, or what are the possible directions to go, not which direction. So it's important to sort of get that there's a wide spectrum of an audience, and each one has a different criteria of how they want to learn. I did quite differently to my other friends at school. I could learn in class. They had to open the book later on. So we're not all the same. We understand that and we get that. So that's why the education that we produce is short, medium, long form. On different platforms.
Three different levels.
Three different levels,
okay.
And depending on the platform, it's going to be slightly different. So, like on Facebook and Twitter, it's this snappy 15-second news bite called a daily dose, and we do that in a few
15 seconds.
15 seconds, sort of what's going to happen. What's the next important question for you to start thinking about and looking out for. And then we have this, the daily pitch, which is like an hour-long session with the analyst that you can join in and have a discussion with, in the comment section on YouTube. We also post the ideas on TradingView. That's actually a quite engaging platform for our audiences and for the people who sign up to Easy Markets.
It's a natural segue to.
Did I hear TradingView? The first impression when you hear the word education is boring.
Yes.
And it's not set in stone like that. It shouldn't be boring. And I think here in the active trading, day trading industry, we've got an excellent opportunity to make the educational material engaging based on basically real time, well, maybe delayed examples. But what we are trying to achieve at TradingView is always publish an analysis which is not abstract or theoretical. Basically, whichever piece of content that you are publishing at TradingView would be related to a specific underlying market symbol or asset class. So I believe that the opportunity to explain your point, being it the fundamental perspective or technical analysis sentiment, whenever it always comes in the context of something which is happening in real time, and then you can retrospectively analyze how this piece of content has been fruitful or not, correct or not, by backtracking through replay option. I think that's the point where education stops being boring and starts being engaging.
I see. And I want to circle back to what Garen said about the 15-second that stuck to my head. When it comes to news, do you all see people want, I mean, desiring to consume, traders desiring to consume shorter clips recently in recent years? Is this a trend when it comes to news?
From my end, what I see, I mean, depends on the news actually. So I wouldn't say it's one directional. I still think there's a lot of more experienced trader want to get the full detailed analysis and then read the entire script and then get the idea and then and have the full. I think on the more entry level traders, they want quick and snappy. They still haven't had the rounds yet in trading, right? So that's the growth pattern I see. I think you spend more time as you get more experience in trading.
So the longer you are in markets, the longer the news pieces you are willing to read.
And there's it's that cycle basically that you would see. So you need to be on all three in the short, medium, large to be able to segment the audience and then guide them through, right? So they're not going to look for the big article and sit down. They're not going to understand it, really. So it has to, what is the question that I should be asking? And sort of that's where it all starts from.
Yeah, just to add to what Garen was saying, I do agree. It really depends as well on your audience and what type of, who your clients are, who the traders are. So, you know, if you're going to send out a daily technical newsletter or a weekly newsletter to a beginner trader, they're not going to be able to interpret the same way another more experienced trader is going to. And that's when I think the short form, you know, snappy social media content helps with bringing in newer traders or beginner traders. So, but I think a mix of both is good for in terms of a marketing approach.
I see. Okay. And in that context, I assume also when it comes to trading for longer, there's also more risk management involved in when it comes to trading the news. Do traders who are longer in the market, do they take risk management more into account when it comes to when there's a big news piece coming out, news event? Anybody?
Yes, yes. It's like when there is a new trader, okay, so it's our job to tell him that by mail or everything that these are the big data, because new trader basically he will go more with sentiments, more on instinct. He doesn't know that tomorrow there is a big data and how it will work. So it's our job in a cycle. First we have to send him a mail that these are the big data. You have to see your position, what you are opening. So if there is a more experienced trader, for sure they will ask for more detail. How it will work, what do you think, what your platform think, how it will behave. Then later on we are doing like seminars for more knowledgeable trader, for new traders. So we are sending mail, everything for new. Basically for new trader, we have to give confidence. And confidence will come when you know the risk management. So we are telling him if there is a news, if there is a big news, so what kind of portion you have to take, how to mitigate your risk. So that will give him confidence that okay, if there is a big news, my account was good, and if it's a loss should be like manageable. And for more experienced trader, we are giving more information because he will be into it. So that's how it works.
I think it will. I don't. The higher risk will manifest in a different way with the more experienced trader. I think they'll still take more risks. It usually manifests in like revenge trade forms or you know
despite the experience, they still want to take revenge on markets. Okay.
I think we're just humans. We're there's hundreds of biases that we usually think about or not think about subconsciously. So I just think it will manifest in a different form. In an inexperienced trader, they're just not experienced enough to be able to manage the risk, and then an experienced trader, it's going to be no, it should have been done right, and they double down or so. So it's a it's a double-edged sword. At the end of the day, we're still human, right? And this is important to note because another part of the education that Easy Market is producing is we're taking a step into the AI, right? And the idea that there is to sort of try to eliminate that bias and just to give the raw data to the trader, right? So we've set up a platform. It's under ai.easymarkets.com, and there you can just visit. You can pick the stock or the index or the commodity or whatever that you want to trade, and it's going to give you a real-time instant analysis on it. So it tries to eliminate the bias that you might have as a trader.
Okay, you've opened up one of the hottest topics in the world for the past almost 2 years, AI. Anybody else wants to comment on AI, how it impacts analyzing news, or?
I would share sort of an unpopular opinion, and I'd rather invite or remind participants and audience to remain cautiously optimistic on the AI capacity, because eventually at this stage language learning models are good at retrospectively working through the massive past data points, and there is currently no correct confirmation that they are as good in streamlining this, let's say, expert opinion for the upcoming action. Something which market experts are full-time tasked to do.
I see. Yeah, we see that in our Discord community that people still want that human touch, somebody to explain the news, what are the potential scenarios and what happened, why did markets move the way they moved, and at least those that stick with us are happy with humans speaking to them. Okay, let's move to another topic. So about social media and finfluencers, and not about the news, but how do they choose brokers? I mean, we did a research at FX Reach showing that people on Twitter have an influence on the way people choose brokers. And a question to you all is, how should brokers adapt their strategies, knowing that traders are often influenced by social media, but also family and friends? How does that impact your Piyush?
Like social media is something like, let's say on Twitter, someone has 50 million follower or 40 million follower, and he's saying that, okay, this can happen, that can happen. He's educating also, and in between he's saying that, okay, choose this broker or that broker. It's okay, but it doesn't mean he's advising it's the perfect or it's the only one broker. The thing is, you have to do your own research. There are certain kind of charges every broker is taking, or what kind of educational things they are providing, where it's based, how it's working. So these are the things. It's okay. From social media, you will find so many things. Twitter, you will find hundreds of brokers. But the main thing, you have to do your own research. From where you are participating, from where, what kind of things you are looking for. You are looking for longer run, or you're just you have short term. So you have to do your own research, then try to choose a broker. Because even on Google, if you will type a broker, they will open like 50 pages. So you don't know which you have to use. So just you have to do your own research, how it works, which is good. It doesn't mean that some 2-3 people have good influencing, so they are saying that's the best. No.
Thank you.
Well, what I would say from what I would recommend for brokers to do is just decide in terms of a philosophy as a broker what story they want to tell, right? So, and that should be the very first step. Associating with an influencer, especially the ones that sell the dream or all the get rich quick schemes. It's very easy to associate. I mean,
contract these people,
yeah,
but
yeah,
they can damage your brand.
Yes, exactly. In the long term, right? So yeah, I would first take the step back and just decide what is our philosophy as a broker, what's the direction we want to go, and what is the story that we want to tell. If in 10 years down the line, there's an experienced trader explaining to his son what is trading, what is the 3 sentences that he's going to describe that broker in that conversation, right? So if my uncle is going to tell me, go with that broker, he's a great one, or don't go with that broker, it's a scam one, and so on and so forth. So that's the thin line, and obviously the regulation comes first. So yeah, that's what I would say.
Yeah, definitely. I mean, I agree with both points as well. Do your own research when you're trying to look for a broker. Regulation is always top of mind. Should be key when looking for any trading broker that you want to work with. But apart from that, it could be variable, a bunch of factors. Could be a regulated broker or trading conditions or certain things, certain products you want to trade. So it really depends from trader to trader. And also, I mean, from a broker standpoint, you want to highlight your key strengths through, I would say, blogs or articles, and convey that, your message and what makes you stand out and what makes you unique as a trading broker in a very competitive space as well. Okay.
Yeah.
Yeah, a few observations from my side. It's definitely worth it that Yohai has mentioned the cross-reference, which is happening at family tables, which low-key reminded me about the Thanksgiving period. It seems whenever American families are meeting up to eat some turkey, the crypto prices are inevitably going up for the next 2 weeks. So the power of word of mouth is unquestionable, and I believe I'm rather positive on that part. I believe that word of mouth, even if being informal, it still provides a quite valuable point of reference. So here, completely agree with Garin. If you are getting any reference point, being it positive or negative, it is definitely built out on someone's prior experience, and the likelihood of, let's say, short-term hype or short-term mistake cannot be counted in during the word-of-mouth communication. Regarding the other aspect of the range, that is lifestyle influencers, I guess I wouldn't surprise anyone that we are trying to abstain from this part of marketing approach, because what TradingView tries to represent is some sort of meaningful content and self-directed analysis, and unfortunately we do not have much space for highlighting new purchased cars or business class tickets. So yeah, there is quite limited overlap between us. So in this regard, whenever there is a focus on the content, especially self-produced content, that is most welcome and appreciated.
I see. Thank you. Okay, we're nearing the end of our discussion, and I'd like to ask each of the panelists in around 1 minute to give this audience one thing to come out with today, one big takeaway. I'll start this time from the end, from Piyush, please.
One takeaway from here is don't be afraid of trading. People have myth that most of the people they lose or something. It's only a myth. Until you are not educated, you are not into it, you cannot say that it's good or bad. Just you have less knowledge or less education, just it's pushing away. That's it, nothing away. Just come, start slow, see how good opportunities you will find here. It's very different from the real market and different profits from the real market. So once you will come into it, you will test it.
Okay, thank you. Garen?
I would say, in one sentence, I would say take your own decisions. I mean, get out there, listen to the analysts, check out the AI, look for all the information, get the latest news. But at the end of the day, take your own decisions. That's what I would say, because don't let the other person take the decision for you, in essence, by giving you that trade direction or so on. So just like how Rowan said, you know, he even if he had an idea about going long on gold, he would go check what the or the short, and you see the counter argument to it, right? So that's a very clever way to sort of look at the trade in front of you, basically. Yeah.
Thank you.
Yeah, I would say as well, news and media sentiment is definitely, you know, a popular tool that, you know, some traders can use. But also it's important for every trader to do their own analysis and try and always dig deeper, trying to understand, you know, the fundamental variables affecting certain things in the economy, and try to, you know, make a sound judgment from that and not to be too reactive. I know I'm asking for a lot, but I mean, it's important sometimes, you know, keep your cool and keep your cool when trading, because it could get very stressful. So keeping your cool, having a clear head, you know, these are some things, you know, you want to try and aim for.
All right.
Thank you. Well, I believe that asset trading, you have contributed significantly to the opportunity to make this self-directed analysis. But at the same time, the experience suggests that relying exclusively on your own opinion can be insufficient and plain wrong. So eventually, to elaborate on the Garen's idea, the most important takeaway is not to follow, not to stick to your own self-directed analysis or to follow anyone's opinion, but the actual key, and you've got this opportunity very easily, is to compare multiple opinion points. So you go to the news and you read the established analysts. Then you go to the social media, whichever it is. It can be a Reddit, it can be TradingView, it can be Discord, and you read through the comments. Sometimes even funny comments can help you abstain from something that you've overlooked. And then you complement that with your own, let's say, personal opinion, and then you've got at least 3 touch points which help you to, if not eliminate completely, but at least reduce the amount of unnecessary errors, speaking in sport terms.
I see. Thank you very much. I think there is a lot of a unified message here of use good judgment when it comes to trading the news. News can be always super duper emotional, and you want to take fast decisions and want to go with the flow of one influencer or one post, but it's always good to balance things and think with a clear head. Okay, I think we're close. And we have maybe time for one question. I have 2 minutes, 1 minute. I'm not sure if we can have questions. There's somebody there. Yeah. Is there a microphone we can give her? 1 minute. Okay. So I guess we don't have time for...
Yeah, I guess there has been not so much argument.
Yeah.
The panel have produced a very coordinated
It's all good.
So seems compelling.
Okay. So thank you very much, everybody, for coming here. Big applause to our great panelists. And connect with us here at the conference. Okay, thank you very much.